Alright guys, welcome back to Wolfpack Cryptos and MMG Invest. First of all, this is not financial advice, this is an educational channel and just my opinion, and I can be wrong. Cryptos, gold, silver, equities, stocks, everything's extremely volatile, highly risky. Do not trade or invest anything you're not willing to lose. Play stops and have emotions out. Alright, I'm going to talk about the Shanghai and then the equities for like 1 minute, and then I'm gonna jump into a video of Allan Greenspan, which aired this morning on CNBC, and today's date is October 18th, 2018. First of all, this morning, just an update. I posted this chart, right? I said I took profits in equities as well. I was expecting possibly a pullback and a rejection from the moving averages, and then we might see a consolidation wedge here. And that was prior to the open, and here I just posted this a few minutes ago. Looks like we're breaking down, and hopefully we'll get a bounce. This will take us into Monday, right? Because well, we'll see. Hopefully we won't close below 6,900 on the NASDAQ 100. I feel like the NASDAQ's leading, and so is the Russell, the equities, the S&P, the Dow, the rest of the markets. So it is interesting times. Just an update on that. I did post that in the alerts room. So here's the Shanghai, and those some articles. U.S. stocks plunge, Italian risk spikes as Draghi threatens Italy. So Europe is also dumping. But what was interesting was China really started off Sunday night on a bad note. And here's just some of the news today. Pound slides, EU, like I've been saying, the EU is going to break up. There's a cascade crisis in China, and that is great news for Trump. That's the headline in this article. And that is good news for Trump and his tariffs, because they might capitulate. Also, all of the emerging markets in China and Europe crashing is very bullish for the dollar and possibly U.S. equities and bonds, because everyone's going to view the dollar in the U.S. as a safe haven. It'll be the last domino to fall. So I will talk about Allan Greenspan and the new Fed chairman, Powell, in a second. Let me just get back to the Shanghai chart. Alright, here's the weekly chart on the Shanghai. 200-day moving average is the white line. The blue line is the equilibrium line. And the price has broken below that in the past month and a half, right? So this is very, very bad for China, because the next area of support is around, it's a bit away. And yes, it's been in a raging bull market since the early 90s. And this would have been the market to buy, honestly, guys. I was too young back then, right? But, and this was way too risky after 2008, 2009 to buy into China's ghost city commercial real estate bubble, 100 times larger than the US's. So this is a managed market. You could tell it's manipulated by the government and Chinese currency manipulation and whatnot. And that's government manipulation. But honestly, there's manipulation nonstop, right, from central banks all across the world. So it's all manipulated, because the currency's manipulated. If the currency's manipulated, all assets and stocks are manipulated. But look at this massive bull market. China's really going to be in trouble once the Shanghai composite falls below 2,000. I think that's when the economy is really going to be in pain in China. But so far, it's not that bad, not yet. But it is the beginning stages of the price collapsing. I mean, there's no support until 2,000, so it's going to bounce off 2,000. Then we'll see later in 2019 if it breaks down, going into 2020. All right, let's get into the U.S. markets. Well, no, I covered that a second ago. All right, here's the U.S. government 10-year yield. Here's Allan Greenspan. So for some of you guys who don't know, Allan Greenspan was the Fed chairman after Paul Volcker. Paul Volcker, he raised interest rates to 20%, which he caused so much pain for so much Americans. But if he didn't do that, he wouldn't have set up the huge bull market in the early 90s going into the 2000s. Because after Paul Volcker, Allan Greenspan had the best job in the world. He could just keep cutting rates for like a decade, or in his case for many. Allan Greenspan was he was like Superman for Wall Street. They loved him. And he slowly just kept cutting and cutting rates, and he helped create the housing bubble crisis. A little fun fact about Allan Greenspan: he in his early days, he wrote a book or a memoir, not a memoir, but a report, and he's a gold bug, Allan Greenspan. Here's the thing, though: when he was the Fed chairman, I bet he was pressured, right? And people who say that the Fed's not political, yes, it is. Believe me, it is. Except for Trump, they don't like Trump. I'll talk about that after I show you guys the video of Allan Greenspan this morning, the interview. It was Allan Greenspan's warning us, all right? And he's not the Fed chairman anymore, so he might actually just start saying the truth. He's also pretty old. And you know, towards the end of your life, maybe you want to come clean. You might have some conscience. So, Allan Greenspan, he was the Fed till 2006. Right after he got out, the economy collapsed. Well, it tanked. They could have collapsed if they didn't bail it out. But Bernanke bailed out the economy. So right after Allan Greenspan left, the stock market started, the housing bubble started popping, right? And then all the QE happened, and then Bernanke was replaced by Janet Yellen. And this is the 10-year yield on the 10-year bonds. And you can see a spike in the interest rates as Bernanke left office. And then Yellen was pretty dovish, and she just didn't raise rates until the end of 2016. And then you can see a huge spike in interest rates since then. And now we have Jerome Powell, the new Fed. So, what do I want to show you about this? This is starting to look like a bottoming pattern right over here. Here, I'll draw it. And I just showed you guys in my last video. That is looking like a bottoming pattern. It's not confirmed yet until the price gets above, I would say conservatively, 3.6%. 3.7 to be sure. Once the rates get up to there might be a dip, but it's going higher and higher and higher. Alright, guys. So, let's get into Allan Greenspan's spiel this morning. And he was saying some real truths. And I will cut in, and I will give you guys my opinion.
The World Economic Forum, or the WEF, says that the United States is now the most competitive economy in the world again after a 10-year hiatus we haven't been for 10 years. We've regained it. Why? What do you attribute that to? And is it policy? Is it time? What is it?
I attribute it to the fact that the rest of the world is doing worse. We're not doing that well. Our productivity increases are 1 to 1.5% a year. They used to be 3.
Is that demographics?
No, it's policy. It's basically, as we say in this book, and I've said in the previous book, what we're looking at is the impact of entitlements. One statistic which grabbed my attention, I was accidentally doing some ratios, and I came up with the fact that from 1965...
All right. So I do apologize for the quality. I recorded this off my TV with my phone. He obviously just wrote a book, and that's why he's on CNBC. But he's talking about the elephant in the room that nobody's addressing on Capitol Hill, including Trump and all of them, and that is entitlements. And the reason why politicians never say, "Hey, we need to cut entitlements," is because they'll never get reelected. And that is the fault in democracy. Once the sheeple people realize they could vote themselves free things, then guess what? I mean, it's just a gravy train until it destroys the economy. And he's hinting towards the enormous entitlement deficits. Entitlement programs, Social Security, Medicare, Medicaid, pensions, you name it. All the empty promises the government gave to the people. And I've showed you guys the charts. It's like 166 trillion estimated right now. Just staggering numbers. Cannot be paid off. And Allan Greenspan is finally speaking the truth. And believe me, guys, he's known about this. I mean, they have hundreds of economists working for them. They know the truth, and they know all about this. So, let's get into the second half here.
I don't know how to put it in simple terms, but that the sum of entitlements plus gross domestic savings is, as a percent of GDP, has been remarkably stable. And if you look at the two individual components of that sum, they work against each other, which very much implies that one is crowding out the other. So the question is it entitlements which are government authorized, or is it the market adjusting? And all of the evidence suggests that entitlements are embodied in the outlook, and that they will never change their pattern. They're mandated by law. Therefore, all of the impact is on a reduction. As entitlements go up, gross domestic savings goes down as a percent of GDP, and that plus savings borrowed from abroad, we've already accumulated $8 trillion in debt.
I think that's a very pessimistic outlook.
Answer to Andrew's questions, he's saying, is it good? In and of itself, it's the right policy, but it's only half a policy.
Yeah, but maybe you raise rates on individuals. Maybe you, I don't know how you do, but you want to unleash
just fiscal policy. I have enough problems.
But spending in non-discretionary spending is where cuts need to come, don't they? Not discretionary.
Sweden has gone through the same thing we have. They made a major switch where the entitlement problems have now been resolved.
But through accounting?
Well,
one of the things they're doing is raising retirement age and linking retirement age to the average life expectancy of people. I mean, that's what you have to do.
That's anti-populist.
It's anti-populist, but unless you do that, you're just going to have more and more money being sucked into
should Medicare be means tested as well?
I'm not going to recommend what you should do in your country, but you've got to bring these things into balance.
You're a big admirer of our country. You can help us.
Here's what the real problem is. Back on page 299 or something in this year's report by the trustees of the Old Age and Survivors Benefit Program, Social Security.
All right, they are literally talking about cutting entitlement programs, Social Security, everything I just said. And Allan Greenspan's like, we have to look at the accounting. And it's just fancy talk for nobody's looking at the numbers, the math. It's unfunded and it cannot be paid off. The economy's not really growing, and especially if you look at the numbers that they put out these days, which have been changed since the 80s, they don't really account GDP for inflation. Basically, if you subtracted the real inflation rate from the GDP, the economy has been slightly growing, like maybe a small percentage, like 1%. But I mean, during the entire Obama years, it averaged out to under 3%. It was like 2.5% a year. But if you actually adjusted it for inflation, it might have been negative, or maybe just somewhere below 1%.
Yes, they will slow down, and they will slow down for exactly the same reasons that Sweden solved the problem.
We have an election coming up. The soul or the geographic center of the Democratic Party at this point seems to be much higher, much greater entitlements in terms of single payer and in terms of Medicare for all. I mean, we see the people, we see where the excitement is, and is that would make things worse, would it
You
not?
have to say Trump's not worried about entitlements. He's not doing anything. He's
I know.
Republicans not to try and tackle
But Bernie Sanders, if we, or Ocasio-Cortez, or any of the real Elizabeth Warren, the excitement on the left is for more entitlements, is it not?
Absolutely. They're all involved in single entry bookkeeping. They don't like to do the debit side, just they want the credit side.
Yeah, okay, yeah, right. No, they're just communists. And they don't care. You have to understand, communists and socialists, they know that the country can't really pay for all the free crap they promise. And they know that it's going to destroy the economy, and they don't care. Because the more poor people they create, the longer they stay in power, as long as they convince the masses to be envious of the rich and the entrepreneurs, to blame someone else instead of looking in the mirror, right? Just want to throw that in there. It's not accounting. I mean, this is basic math accounting. I mean, it's basic accounting 101. Everyone has to take that in college. So, double entry accounting. It's like the way they say things on mainstream media. It's like for an average person, they try to, I don't know, wash it down so you don't really, hear something alarming. But it's kind of funny. Let's continue. It's almost done.
And the world is double entry. And if you want to get ourselves into real serious trouble, don't attack this.
I think he's 76. This is the last video.
What the Swedes did.
Well, Sweden also, I think, does have single payer, does it not? And that's always what's held up as an example of how we should run our healthcare here. And then the critics always point out that it's 9 million people or something. It's not.
Well, all you have to do is get the correct financing system that creates the revenues that the entitlements create. And to be sure, as the population ages, we're going to build up ever-increasing entitlement levels. And as far as I can see, everyone is blinding themselves to that fact. It's built into the data. The Congressional Budget Office forecasts that there's major troubles ahead. Nobody is listening. The reason they don't listen is that the financial community doesn't care about bookkeeping. What they care about, which is what they're going to confront, is inflation.
He says inflation at the end there. What they care about is inflation. There's one more. So the markets, believe me, they know that it's unsustainable.
Uses products which everybody wants, makes them cheaper.
But the markets think that they could run maybe another 10, 15, 20%. There is the Trumphoria, and if the conservatives win the midterms, which my analysis is telling me they will, that is also will be bullish for the stock market. And the fact that the rest of the world is just falling apart, there's going to be massive capital flight out of those countries into the U.S. So investors, traders, corporations, they're all leveraged to the gills, but they're going to try to, they're hoping for maybe another year or so of rising stock prices. So, but no one's really looking at the enormity of the debts. And if we're in a raging bull market, the second longest running in the U.S. history, and it will be the longest running, I think, like sometime in 2019, if in the summer possibly. So, like 14 months away, something like that. I'm not sure. It is dangerous to chase the last 10%. But, where was I going with that? So, corporations also bought back their stocks. And they need the stock market to go a little bit higher for them to start unloading all of the stocks they bought with all the, with debt. They pretty much, they put out corporate bonds, right? And they raised a bunch of debt, bought back their stocks to raise their stock prices. I don't know. It's just everyone's ignoring the debt because they think they could kick the can down the road longer and longer. Basically, it's complacency of the stock market because everyone hated this bull market since the beginning in 2009. And everyone's been on edge for about a decade, but they're finally all just becoming complacent. The market's sucking in every last person it possibly can before finally it gets to that, summit or that trough where there's just no more money coming in, and then all it takes is one fund to say, all right, I'm out, and that's all it's going to take, and then it'll trip the algos, and down it will go. Just like last week we had a pretty large crash. It was an 800-point drop in one day. Let's finish this. This should be the last video.
Better. And the other is the inequality that comes from cronyism, from political connections. Now, the first sort of inequality, I don't really worry. I don't worry about Bill Gates or Steve Jobs when he was alive having so much money. I do worry about connections and cronyism, because what inequality is often a sign of is that somebody's come up with an idea which makes everybody else's life much, much better.
All right. The typical NPC talking point that the socialists put out in the US, Europe, everywhere, is that capitalism and free markets create inequality. The only inequality it creates is if you don't work and everyone else is getting richer because you're not working and they are working, then yeah, you're gonna see a huge gap growing. Like that guy could buy a Lambo and you're buying a Fiat. All right, Fiat's actually not bad. But that's because of the entrepreneurial spirit, right? So capitalism does not cause inequality. If anything, as the economy grows bigger and stronger, the wages go up, inflation goes down. The thing that's causing inequality is regulations, taxes, and money printing by the central banks. That is all a form of socialism. And socialism is what? A slow death into communism. So that's what I'm saying, and he's gonna sort of hint towards that in the educational system and whatnot. But believe me, inequality really exists in socialism and communism, because there's only two classes in socialism and communism. That is the majority of people, who are all poor, and then the rich elite, the oligarchs and the monopoly corporations, and who basically are in bed with the government, who creates regulations to kill the small competition, the small entrepreneurs, the small business owners, right? So I think I've explained that pretty well.
But in terms of the size of the American middle class, I would say that if you have a functioning, successful education system, you're doing much more to create the foundations of a stable middle class than if you have a trade union movement.
And wouldn't a competitive world that they're competing with us, but they're also raising their own standard of living, which allows us to sell into them. I mean, you're a global.
One comment. The educational system set up by the government, and most of the professors and teachers, not all of them, but a lot of them, most of them, they lean to the left. They lean towards socialism and control and government. And you could definitely, I mean, I remember all of the things they used to teach us. In college, I'd end up arguing with my professors, the socialist ones. And that is because, you know, it's easier to make it in a bureaucracy than it is in the private sector. The rewards in the private sector for your hard work are 10 to 100 times larger than the public sector. Although with socialism and communism, you actually get way overpaid in the public sector for doing garbage work, because nobody gets fired in government jobs. So there's no incentive for you to work hard, but you bring home this huge pay. You have to understand how parasites work, okay?
Globalist, but when it comes down to it, now you're worried that the globalism is what's not allowing the American dream to happen anymore?
All right, the globalism deal. All right, so there's multinational corporations. Those are the ones who are also in bed with the military-industrial complex and all the politicians, and they want a global autocracy. Basically, all governments around the world in bed with enormous billion and trillion dollar corporations like Amazon, and taxpayers fund these corporations, and that actually happens right now, and it's been happening. Amazon, Tesla, all the FANG stocks, the pharmaceutical stocks, Monsanto, all these evil corporations, they are funded, not all of it, but a lot of it is funded through taxpayer money. One is through literally subsidies and grants, two, in tax breaks, and two, the Federal Reserve prints money on the behalf of the public, who have to pay it back with interest, and all that money with derivatives ends up in the stock market, where the stock shares of these corporations just keep going higher and higher, and that's really tax money, if you think about it, that's in the future. Your kids and your grandkids paying for the stock valuations of Amazon, who's practically hasn't really made much of a profit at all. Literally, they haven't. They just make revenue. They just have money because their stock shares keep going higher, and they keep buying out everyone. And then there's other things, nefarious things, like I think the CIA or NSA have they use Amazon for their storage of data that they have on all of us. Like, just me saying those alphabets is like now stored somewhere. But yeah, I will digress.
Can't we sell to the billions of people in China? Can't they wear?
All right, so the globalism, these multinationals, and China, you know, the competition between China and the U.S. I mean, there wasn't competition. China pretty much gutted the United States. That's how we are no longer a manufacturing nation. We are a service-based economy, but the funny thing is services are derived from manufacturing and making things. So yeah, there's just economic warfare between China and the US. China wants to become the new world superpower and the manufacturer for the world, and that is basically how the United States became the world superpower, by manufacturing and selling everything to the world. And they would pay us in gold and money and energy, oil, and whatnot. And it gets way more complicated. But I mean, they're touching base on this. But I will go into that on my next video.
Levi's, can't they?
Absolutely.
If it wasn't for the tariffs.
Absolutely.
The trade war.
But for many, many years, they didn't have a McDonald's to compete against.
So it was the labor movement that allowed all the prosperity to
not the prosperity. I'm not suggesting the labor movement created the prosperity. I'm saying the labor movement created. Actually, that's not true. The labor movement created, to some degree, this. So
because of World War II, we really didn't build these companies. That you're back to, we really didn't build.
I'm not making a government argument at all.
No, but
it has nothing to do with the government.
The American exceptionalism is because it was a loaded deck from the.
I believe that.
Okay, the guy on the left, the globalist guy, he's making a Keynesian argument that World War II boosted the economy. That is such a load of crap. I've already talked about this. If destroying things and making tanks and, you know, weapons boosts the economy, then why don't we just blow everything up and then keep building tanks and guns? Listen, all the men that went to World War II and all of that, I mean, instead of going to war and then wasting money on a bunch of things to blow a bunch of things up, those people would have been building businesses and building industry within the country, besides going away and going to battle. All right. If anything, World War II introduced women into the workforce for the first time, because they didn't really have to work. Because, you know, back then the household was set up where only one person had to work, and they could, in the U.S. at least, and they could support an entire family, because that's all you needed. Well, you know, today, 2 people working overtime can't support themselves. And that's because of inflation. And the decay of the empire as a whole.
I believe that in the late 1800s and the early 1900s,
it was easy.
Some remarkable companies that were then able to get a...
Alright, I'm pretty much done with this. I hope you guys enjoyed this. Give me a thumbs up, share my videos. If you're interested in cryptos or gold, silver, mining stocks, the links will be below this video, and you can check us out in our free chat groups. Alright guys, until next time.